gold is being taken out of the Western markets and moving east. Because how can they trade that much gold, but you don't in silver, but you don't have that much gold and silver to trade in the US or in London? So yes, it's leaving the vaults. A lot of it's flowing east. Probably a lot of manufacturers are grabbing it. A lot of investors are grabbing it. So I'd say the smart money has begun the run on silver. And when you look at the COT report from the CFTC, the bullion banks have been positioning net long every single week in gold. They're not net long yet, but they're getting there. It's going to take probably a few months left. So that few months, if they continue the trend and they do get net long in gold and silver at the same time, I think that's your inflection point where you would say at that point, okay, the sharp money says it's going to rise. That's probably somewhere in the beginning of when we have our next bull run. That's really what I'm looking at. Because to me, it's the physical that matters. I don't forget the derivatives. I don't care at this point anymore. I know the derivative complex is doomed. I'm looking at physical trade. And as soon as those bullion banks get net long in gold, I think that's where you're going to see the golden pop start to really begin, because I think they're timing it to where they know the financial issues, because all the big banks that trade the derivative markets know exactly what's going on economically. They're probably more data than anybody. The runoff in the silver and then the repositioning of silver and gold on the derivatives market. The next thing I would need to see is a runoff in gold, which hasn't quite happened yet. If you look at how this market works, and I've had this explained to me in bits and pieces by people much smarter, and I've followed it a lot longer, and I've kind of taken all that and put it together. If you look at SLV, for example, huge short position, keeping the share price down, silver being liquidated. Why? Because somebody wants the silver. And if you destroy a bunch of shares, that usually bolsters the share price. So if you went and just redeemed all the silver at SLV, you'd have shares zooming, and you don't necessarily want that to happen, because you'd have a separation in the SLV price and the actual silver price on the derivatives market. And so what they do is they short the SLV and take the metal out. Where does it go? I don't know. We don't know. Nobody has the records. I suppose some to industry, some to investment. But that keeps the price down. Well, what does the SLV price indicate? Well, all the derivatives traders look at SLV price as a proxy for what silver should be. So then that's why you have it short on the derivatives market. So looking at how all the pieces interact, it's pretty damn obvious that prices should be much higher given the physical. They're not. And I think it's cover for people to go get physical. Every time the bullion banks go longer in a week in gold and silver, the managed money goes what? Shorter. Who's absorbing that trade? All the money managers who aren't gold and silver people, and who read the bankers' reports about where gold and silver is supposedly going. So this is how the whole thing runs. So you're getting a report from whomever that you trust that says, oh, gold and silver experiencing pressure. You go to your whoever's managing your money and say, okay, if we're going to do gold and silver, let's go short. And that's what happens. And the neck pride's cover for the bullion banks to go long. It's a wonderful system that they have set up that does not reflect economic reality, but does allow knowledgeable people in the space to continue to make money off that derivatives trade, which every time we see an article come out in the news about somebody getting fined for this, that, or the other and manipulation, it also goes on to point out how much money they made. So I guess it's been lucrative for the bullion banks to do this. Yes, we have less silver available for trade than we have had the last few years. It's still fairly robust. The market can still operate, but if that trend continues, yeah, that will become an issue. And so given that we've had such big deficits in what the industry is using every year to what mine supply is, that's where I say, for me, not financial advice, but for me, go in on silver. Because if this is not the event, then damn it if I don't know what is. Because what other condition would need to be there? The only thing that could stop silver from really popping at some point in the near future is if somebody has 1 billion ounces, they hit it for all these years and they dumped it, and they wanted to get rid of it at current prices. What are the chances of that? I don't know. Nobody knows. But everybody I talk to in the industry says it's probably less likely, given the fact that we need it for industry. And the need for industry is only going to increase year over year. It has to, with the way society's going and the relationship of silver used in everything. And so the way I look at it is, now's probably the time to go long silver if you were going to do it. And what I did was I took all of my fractional gold and some of my 1 ounce gold coins, gave them to my friend Ian that runs Arc Silver, and he gave me a bunch of silver. And I'm down to now just a little bit of gold left in my collectible gold coins, which I'm going to keep, but very little 1 ounce or bar gold. I have a little bit, but not much. And I'm really heavyweight silver, and I could really be wrong on silver. You know, things go backwards of the way they should often in this market. You see the stocks rising on negative news when everything else is crashing down. You see gold and silver rising when we get a better than expected NFP report. So let's look at the markets as a whole for a moment and just look from a little bit different lens. I think we're in a period in which people don't know what to do, because if you look at past crises, bonds and the dollar, safe havens, bonds and the dollar. Certainly, milkshake theory is playing out now as Brent Johnson, would have you believe in that the dollar is strong and that it's getting, the DXY relative to other currencies getting stronger. People setting up alternative currency systems. Do people go to the dollar and the bond now? I think the market's confused. If you look at like a technical indicator, and the wider you have a divergence on that MACD, the more schizophrenic that market is. And you're starting to see massive indecision in the US bond market. Should I buy bonds? Is it a safe haven? Is it not a safe haven? The market doesn't know this time. And you can see it in the data. If you're a data geek like me and you love looking at data, I know a lot of people aren't, but thank God for people like me who are dorks and do this kind of stuff. When you look at the data, you can see it's a schizophrenic market. And so nothing surprises me in gold, because I think half the market thinks gold should rocket, and the other half of the market says, it's a barbarous relic. People don't know. And if you look at if you watch CNBC and Bloomberg, the screamometer, they don't know either. I think they're still kind of freaking out about what's going on. There's something about gold and silver that over history have stood the test of time during crises, and I think people are going to come back. But what many have said, many more smarter than me, is at the end of this fiat system, we're going to have wide swings in a lot of asset classes. Alistair McLeod has written about this. Tons of people have written about this, that I respect. You're going to see $100 swings in gold every day. You may see $3 or $4 or $5 swings in silver. As people figure out, where do I go? What do I do? And remember, spot prices in gold and silver are determined by derivative market, not physical trade. So while people are taking physical off the markets, we know that. Every market wrap up I do that I put out on Sunday night, we talk about silver stocks, gold stocks, the COMEX. Rafi talks about all the time on your channel. People follow him. We see in the runoff in silver. So the physical market is, and we're seeing some of it in gold as well. The physical market is strong. I look at the spot market and I think it's a clown show. It's a clown show of clowns that don't know what to do in the market, led by the bullion banks who are the smart money, are going to rob everybody blind in that market. And so while I document the clown show every week, it doesn't worry me that much. And the fact that it's given contrarian indicators to what it normally does makes sense to me in light of people who trade those markets that determine spot price don't understand. But the people who do understand or are buying the physical get it.